Let's get to this is Spigot NIMCRUTs are a really unique and powerful version of a NIMCRUT that takes what's Peter's saying to the kind of the next level. And so Peter, want to give an overview of kind of what's the value of a Spigot NIMCRUT and what does its structure look like?
Yeah, so the basic idea is that a Spigot NIMCRUT is a NIMCRUT that has a single member LLC that it invests through. And so rather than just holding assets inside the trust without anything else, it holds assets through an LLC. And so the idea is that the LLC itself is disregarded for income tax purposes. And so everything in the LLC is treated as being owned by the NIMCRUT for income tax purposes. But for trust accounting purposes, and remember, if you go back to the previous slide, a NIMCRUT distributes the lesser of a fixed percentage or the trust accounting income. And so this confuses people. It's probably the most confusing part of this whole sort of discussion. But trust accounting income is not the same thing as taxable income. And so you could have $1 million of taxable income, but $0 of trust accounting income. They're not the same thing. Trust accounting income is an accounting concept. It's determined by some combination of the trust agreement or state law. And so it's not the same thing as taxable income. So anyways, the important thing to know is that as long as assets are retained inside of the single member LLC, the NIMCRUT won't have any trust accounting income in general. And NIMCRUT has to distribute the trust accounting income each year that it has. But if it has zero trust accounting income because the income is inside of a single member LLC, then it doesn't have to distribute anything. And so instead of distributing, like in the example where you have an index fund that's generating 2% dividends each year, with a normal NIMCRUT, you'd be distributing 2% a year. With a Spigot NIMCRUT, because the dividends would be inside of an LLC, there wouldn't be any distributions unless you wanted to make a distribution. There'd be zero trust accounting income. And so there would just be no distributions. And so you could go 10 years potentially without a single distribution from the trust. And so that means that you're getting not just partial deferral, but you're getting 100% deferral for the first however many years. And so you could potentially wait until, if it's a 20-year term, you could potentially wait until year 15 or something before you make any distributions.
Yeah. And so really the point is, with a normal NIMCRUT, you're not, unlike a standard CRUT, you don't have to take that full percentage of distributions each year, but you have to take the realized income. And with a Spigot NIMCRUT, it doesn't matter whether you sell Apple stock or receive dividends. It's your choice to when you take distributions. So you can control when you need the money. And until then, really maximize the pre-tax growth. Is that kind of a fair assessment?
Yeah. And so in other words, it both gives you more deferral and more
More
control in general.
control.
And
Yeah.
so with a NIMCRUT, the advantage of a NIMCRUT versus a normal CRUT is that you have some amount of control over distributions, because you can choose what to invest in. And if you invest in a lower income producing investment, like a index fund or something, you're not going to have a lot of cash flow. And so you're not going to have a lot of distributions, but you're still at the mercy of whether the stock's throwing off dividends or capital gains or whatever it is. With a Spigot NIMCRUT, you can really control the distributions from year to year, even if you're investing in private credit or something that's throwing off a lot of cash flow.
Yeah. Yeah. It's very hard to get the combination of control and more tax deferred growth. Typically, when you get some tax benefits, you give up control. This, relative to other CRUTs, gives you more control over distributions and more tax deferred growth, which is a really powerful combination.